Well. Good morning, traders. Happy Tuesday to you. We are at all-time highs, or just about at all-time highs in the S&P. You can see them right here on the screen. I mean, you know, this is the most hated rally ever, and we are about ready to hit all time highs. What's the chances of us hitting all time highs today? I'm sure it's probably pretty good. We do have a lot of things happening today. One of the big things is going to be this vote to see if we can reopen the U.S. government, even though it's widely expected that it's going to happen. And I don't think if the vote doesn't pass, the markets are going to care too much, because it's just making sure everybody's in line and voting. But yeah, it's really interesting how the market's just poised right here at the highs. We're still knee deep in earnings. Palantir, they beat yesterday, so that was it's up to like 10% this morning. We still have Google later on this week. Today we have AMD, which is going to be really important, post market, especially for the whole AI narrative, if you will. So we're going to be keeping an eye on that. And you know what? I heard Cayman is actually playing both sides of this gold wager. We were.
Disgrace. It's
I
disgraceful,
know,
Blake.
and that's that reminds me of the stockbrokers back in the 80s that used to call people on the East Coast and on the West Coast and say, "Oh, we're buying, GE," and then they'd call them on the other coast and say, "We're shorting GE," and then whichever one makes money, they will just call those clients. K-Man, that is disgraceful. You say gold is going to 4,400 and then it's also going to 5,100?
Uh, call it a range. Call it a range. Good morning. Good morning, Blake, and good morning, everybody.
Good
Hey, you
morning.
know what? I mean, those guys, and they were like very famous back in the days. They always had 50% of their audience who were really happy about their calls.
That's right. We're right 50% of the time. Let's look at and just so you guys can see, we are nearing that 5,000 level in gold. And what's interesting, I think, about this rally in gold around the 5,000 level is the levels that really are important. And let me just show you really quick, because not only is it the upper end of the previous channel that we're back in already, but you'll notice it's the 50% retracement as well. So it is, in my opinion, going to be a fairly important level. It's a big number. It's psychological. How timid, I guess the question will be, how timid buyers are this time around as we approach 5,000. So my question to you is, K-Man, now I can put you on the spot since I've heard your voice. When we get to 5,000, what do you think is going to happen?
I think if it breaks above 49.5, 49.60, I think the next stop is 5,100. 5,000, yeah, could be a bit of a psychological level. I guess there's again probably a few triggers through the 5,000 level line, but I really think that we could start to see a little bit more of a rangy market, albeit wider because of the volatility that we had over the past weeks. And yeah, I think 5,100 from here is reasonable, and 4,400 seems a little far away right now. But it was a very interesting hold, as you also show on your picture there. Yeah, so I think this is really, we could be in for a little bit more of a range. And I was looking at a rather similar thing on silver, which I showed on the flow show as well. It's wide, but what do you want with this kind of volatility when you do $10 in an hour in silver? I think we could be looking at a 7,100 rough cut range for the time being in silver.
Yeah, and it's interesting. I'm curious, just like everybody else, on what people's takes are, and I've heard a lot of references to the Hunt brothers moves, and how Yeah, silver went from $10 to $50 and back to $10 again. And I think every one of us here, myself included, if you miss this run, like I did, I mean, when I say I missed this run with physical silver, physical is not easy to get in and out of. And whenever silver makes this big move, or silver made this big move, you always look back. I mean, at least I did. I look back and go, shit, I wish I would have bought more physical, that I was acquiring back in the 20s, back in like 2018, 2019. It's like, why didn't I acquire more physical? I actually will buy more on any dip down to 50. I think 50 is obviously, if you look back on like obviously a weekly basis, this is going to be the level, which I think is going to be a major floor for prices. Should we ever get down there? The question is, will we ever get down there? What do you think,
Yeah.
Gabe? While I have
Well,
you here.
that's the thing. I found that at least for now, that's close to 70 hold. Um, Pretty interesting and actually could already be enough, you know. That's what I thought of it. It take that well, parabolic spike and then the collapse away. Just look at what happened. Let's say since October. It's always come bid ahead of important supports, and 70 could just be that one right now. That is what what I'm starting to think. Seen from where it bounced, seen we have not yet, or we still have to see another retest if there's really more to get rid of. But I've got the impression that 70 may be your new 50 in current market conditions.
Yeah, I'm trying to be a little bit more patient, because if we think about it, like I whenever I acquire like any type of investment, and I'm talking
Mm,
about trading. I think about this too when I trade, but not as much as when I'm actually putting money to work for a longer term. Like, if the difference between 90, where we currently are at basically, and the difference between there and 50 is, it's
huge.
basically, a big discount from where we're
Yeah, it's
currently
huge.
at. Yeah, it's
There is.
huge. So
Mm,
so I'm trying to think more on the lines of, I hope we see this.
mm,
I'm trying to be patient for it. And this is when because if you were out there trying to buy physical on Friday when we were trading down in the 70s, you weren't getting it. Maybe
no.
you were. I mean, I guess if you went over to, like, my broker is literally just down the street. I mean, I drive right by him
Yeah,
every
but
day
would
on
you
my
not
way to
have
the gym.
would
So.
would you not have charged you a 10 or 15 bucks spread?
Right, right. So you got, like, when I'm talking physical, and I'm not talking trading here, guys. You got to really wait for the volatility to subside, and for us to
Mm,
like base somewhere before you're going to get prices that are
yeah.
reasonable for physical. Anyway.
I would say there is a path to 50 if we see wars getting solved. I mean, Ukraine, Russia, if that gets solved, that could be the trigger to go and revisit 50. But for as long, and we may know at the end of the week, if when they meet on Thursday, although they both already said that some of the suggestions on the table are still not meeting whatever the one and the other side would want. So, but get a solution of stuff, then there is a path to 50. But for the rest, yeah, right now fundamentals are still not, to me at least, not of the likes to see a direct path back down to 50.
All right. Well, thank you, K-Man, for your thoughts. Let me go over to Ryan. Ryan, as you said on the flow show this morning, I got to catch just a little bit of the flow show, but you said it is kind of nice waking up and not having a huge amount of volatility to deal with. It's been a pretty quiet session thus far. There hasn't been a lot moving the needle as of yet, but is there anything that you're looking at today that could really move the needle of the market?
Yeah, I think the JOLTS report. Oh no, wait, we're not getting that anymore.
Oh, you had to go there, right?
Yeah, I went there. You bloody Yanks. You've been shut for 2 days, and the whole world's crumbling already. Yeah, so I think we got to keep an eye on this shutdown business. There's more votes happening today, apparently, and just see whether it's going to pass and we get over this step quickly, or if it's going to actually drag on and become another issue, getting data and whatnot. So, touch wood, it should be a short run thing, and then hopefully we'll get the data next week. But if it isn't, we're going to be back in the same boat again, and probably going into another Fed meeting where they won't have any data to deal with. So I think that the market might start moving on that. Otherwise, yeah, just see what the dollar wants to do. You know, it got a bit of a paste in the last couple of weeks. It's had a bit of a recovery. Can it keep to that recovery? Or are we just going to swing around a bit, you know, see a bit of a sell-off, then a bit of a bid again, and see where we want to go. But that, you've got the S&P chart up there. I'm very interested in that, because I think it's looking, the price action is looking like we're building for a break up through that 7K level. So
Oh, hell yeah, man. It's like,
cash open.
what's stopping this market? I mean, there's nothing, and it's just a hated rally. It is just a hated rally, but it's a rally that also, I must say, is not shown any signs of relent at all. It doesn't back off. Pullbacks have been so minor, and it's just, as you point out, you know, it looks poised for another, you know, move higher. And I know everybody wants to see the market roll over. Everybody wants to see, you know, not everybody. I should actually say that as traders want to see, you know, some big move lower. Everybody is a bear on the global economy. There's I mean, it's amazing. Like I still, you know, I listen to a lot of these like YouTube podcasts and YouTube shows. I listen to macro economists, especially when I'm doing analysis in the evening. You know, for you know, our basic technical analysis, I'm always writing all the stuff at the end of the day for all these instruments, and I always listen to these podcasters, and it's amazing how bearish they are on the U.S. economy, the stock market, and the constant crash calling. And when you look at price action in equities, it's showing you the exact opposite of that.
Exactly that. You don't listen to the opinions, you listen to the price action, or watch the price action. I'm still long from the Davos trade I took, and I'm thinking of adding, if I see the cash market breaking up to that 7K properly, I'm thinking of adding on that break.
But I also want to take a step back and take a look at, like, this is a longer term view of the S&P, and let's also realize that since the beginning of the year we really haven't gone anywhere. But because we're in this like ascending channel, I do want to highlight the idea that when you rally, it's met with selling. And the reason why we're met with selling is because we're at the top of a channel right now. So every time you hit a new high, it's frustrating because there is no follow through. And the only reason why there's no follow through is we're bumping our head up against long-term resistance. So when you're in a situation like this, my biggest suggestion to you is look for the dips. Look for the panic dips. Like for today, let's say the House doesn't pass the funding bill, and you hear everybody, you know, get all crazy about, you know, oh, the government's going to stay shut down, and the stock market gives you a, you know, a 0.5% or 1% dip. And if this happens, you know, you see something like this, you know, where whoops, let me grab my drawing tool here. Stop it. Stop. Okay. When you see something like this, you know, you probably just want to use it to you know, take advantage of a dip, you know, and so use the dips to be bought, and you sell into the rips. If we get them, we get to new all-time highs, you might look to, you know, let go of a little, and then, you know, buy it again on a dip while you're at least in this rising channel. While you're in the rising channel, just respect it as such. You know, let's talk a little bit about what's happening in cryptocurrencies, because Bitcoin, I know we've been harping on this literally since November or so. I have to say, you look at equities, we're at all-time highs or, thereabouts. Bitcoin can't get it out of its own way. Ethereum just it's near lows. I mean, if we get to a point where we start to see equities actually pull back, whenever that may be, whether it's today, whether it's 2 weeks from now, whatever it is, whenever we start to see a pullback in equities and it looks substantial, like to a point where we're like, okay, we're making lower lows, lower highs. This looks like we might actually see, a 5 or 10% correction. Heaven forbid what is going to happen with crypto, because look at Bitcoin. We are holding that 75,000 level like it's, holding. You want to talk about hodlers? That's holding on for dear life, because if we break through that, we should trade down to 50,000. The bear flag pattern that we've had outlined here for months points us to 55,000, or I think it's actually 52,000. That seems logical, because that's probably going to take out a lot of longs. Whether you're talking about MicroStrategy, you're talking about Tom Lee and his $6 billion loss in Ethereum, whatever the case is, we are looking at lower levels should the equity markets ever correct. So you might not be shorting stocks, but man, you should be keeping an eye on crypto. Ryan, do you have any comments on crypto while we're looking at it? It's a great risk barometer, right? Because there's no other reason to own crypto. I mean, it's just a risk barometer.
Yeah, we were talking about this on the Flow Show, whether this dump in crypto has been longs taking profit to pay for getting wiped out in gold and silver in the dump.
But that's been happening literally for we've been doing this for months. Like what?
Well, different subjects, different times, different things. This is just another episode in the long chapter, but it's not looking as bullish, obviously, as it was last year when it was getting up to all-time highs. But it takes two to make a market, and as you're pointing out there, it's on very important support at the moment.
I mean, K-Man, wouldn't you agree that this is the most raw, the rawest of the raw, like risk instrument? Like if you are going to take on risk and you want to talk about the riskiest asset around, it's Bitcoin.
Risk or gamble?
Yeah, well, I mean, or I guess you can just jump on, Polymarket and start making some bets. I guess that would be the most risky thing you could do. But these cryptos, I mean, don't you define them as like just the ultimate risk taking? So if stocks are at highs, what's the problem here?
Stocks are at highs, and then we also went to since October silver and gold to highs, and even not looking at them going parabolic, those precious metals, which they did, of course, but even taking that out of the equation and just say that we've been to all-time highs and crypto wasn't following, that just gives you an idea about which are the real store of values up to now. And there's a lot of reasons for crypto, but the store of value for me is not yet one. And as Ryan said, we were talking about this on the Flow Show because we got asked a question, and I also think that part of this dumping crypto is due to trying to cash in on or letting some crypto go just to pay for whatever misery some people were in precious metals when we had the 20+% dump in gold and 30% or so in 40% in silver even. So no, but I think it just gives us still the idea about what is the real store of value when the market wants to shift, which since the start of Trump 2 there has been a clear shift going on. And some of let's not forget as well that some of the crypto boom that we had was also sparked by Trump's administration, who wanted to be a big promoter of, saying that it's going to be the financial instrument of the future, etc. That drove a lot of people in there as well for maybe the easy money, maybe the believers. But no, I think we have seen what are still the real stores of value in current markets if the shit would hit the fan, really. and that would still be the precious metals. That's how I look at it. Or everything that's happened.
Yeah, and I still believe I actually do believe it, like generationally we are going to see cryptocurrencies actually do a little bit better as a store of value at some point. But what I think has to happen, guys, is we have to see this like real breakdown first and real big washout. And so I'm gonna be stepping in front of Bitcoin, somewhere in the 50,000 mark, somewhere in there, if seen. And I've been saying that for a long time, but yeah, we reach for the 55,000 level. I'm actually gonna probably step in because I feel like there'd be enough of a washout, like enough of longs being taken to the cleaner to be able to step in. Hey, let's talk about something a little bit closer to all of our hearts here. Let's talk a little bit about the RBA last night. The RBA, I mean, look, they raised rates. I mean, we're sitting here trying to figure out when we're going to be cutting rates next in the U.S. And here we have is the RBA has raised rates and looks like they're going to raise rates again in the future. They even upgraded their inflation forecast. So Ryan, what do you think about this Aussie dollar and where are we going to go from here?
Yeah, bit of a mixed fortune really in terms of the Aussie dollar. Kiwi's up a bit as well. Yeah, I think that reading the statement and the lines from Bullock and everything else, definitely a hawkish tilt, but still trying to stay a bit constrained and not let the market run too far ahead of itself in terms of future hikes. But I think the wider picture is here's a central bank that had been cutting even in small parts, has now had to raise rates for inflation problems again. You've got the ECB, which has got rates where they want it, but inflation's still a bit sticky. If you look at things like the core, you've got the Fed also seeing inflation pressures. PCE is expected to tick up. We saw CPI back up again and being sticky. The UK sticky as well. So we're Canada, Sweden, I think. So we're seeing a lot of countries that they might find their bottoming in inflation, and if that's the case, we could over the next few months see a market getting a bit more hawkish around global central banks, which is going to change the picture a bit. So, countries like the RBA, Australia, even Canada, New Zealand, they can sometimes lead the way in what's going to happen with rates moving forward. And if the Fed is going to catch the same cold, then Mr. Walsh has got a big job in his hands to try and convince people that they need to cut rates.
Right. I was gonna say, and that's the great point. I'll ask K-Man about this. I mean, Warsh is gonna have a hell of a job. I mean, let's just go into Ryan's scenario. Inflation is sticky. You've got other central banks. I mean, look at the Kiwi, by the way. The Kiwi is still freaking. I mean, this is bid. I mean, we get above 61.20, and we're off to the races here. We've already severed this long-term descending trend line has already been taken out. We start seeing inflation kind of be perky. And by the way, we do have European inflation tomorrow, if I'm not mistaken. I think we have some German and Eurozone inflation data coming in tomorrow. But what happens with the dollar? Because and what will Warsh do? You know what? It's like linguistics gymnastics. I've tried to say Warsh several times and other words in combination, and it really has been screwed up. Try it. Try doing that. I'll give you a few examples as I come across them. But anyway, K-Man, what do you think happens to the dollar? I mean, in a situation like that.
Pop. No, the thing is with Walsh, he said in interviews that and still need to explain to me exactly how that's going to work mathematically. That by shrinking the balance sheet, they could actually bring inflation down, and therefore there would be an easier path to lower rates. So I know that sticky inflation, the rest of the Fed, his biggest job on hands is to go convince other people other Fed governors to cut if there is no material reason, inflation included, for cutting, and if the economy still zooms on like it's doing now, it's going to be hard to explain a cut. But the hike scenario, even Powell said over the last meeting that none of the Fed members is foreseeing or looking at hiking rates. So it does seem that the hurdle is a bit higher over there, and I'd say would be perhaps a bit higher in the States, but still not as high as in the Eurozone, because their growth is an issue too. So I think it may be left over to the smaller, in between brackets, central banks, smaller economies, central banks, to to hike. In Australia's case, we know that that Bullock is a hawk, right? She already said, the inflation report before this one, that it was a defeat. That she was looking at hiking rates again to combat inflation, and it's perhaps not as present elsewhere, especially not if we look at the real big blocks.
Yeah, and by the way, I'm just I was pulling up your charts and some of your comments that you made this morning during the European update. If you guys don't get, like, Cayman and Ryan's analysis like right to your desktop, you can do it right through here, through Forex Analytics. And technically speaking, I mean, we're still holding up really well in the Aussie.
We
So
are, but I'm only half impressed by the Aussie dollar move because of the dollar side of the thing. So that's what I'm saying. I still think Aussie can do well, but then I'm looking rather at crosses than really looking at the dollar right here and now. And that's what I said in my comment to the.
all right, very good. And so you guys can read those right here, as these guys update, the platform throughout the course of the European morning. I'm going to turn your attention really quick, just for a few minutes. We don't have any data coming out. Let me just double check. I don't think we have any like data that's going to move the markets this morning. We have JOLTS isn't coming out, so we're not getting that today. All right. I want to have one last topic before we let you guys go. So this is the chat room for Forex Analytics. If you guys don't know, I was surprised actually yesterday. Michael Brown, some of you guys know who he is from Pepperstone. He was in a chat room and we were discussing about jobs data, and he did a write up, and he's like, shameless promotion, and if you read his write up, in that he's really downbeat on the U.S. labor market. Now we just got ISM manufacturing data yesterday, which came in much better than expected. Even the employment component of that yesterday didn't look bad at all. But Michael is saying that there's a lot of weakness in the labor market, just to kind of sum up what he was saying. And I was surprised, and I even called him out on it. I'm like, you're never really negative on the U.S. jobs market, or has been in the past. So it's kind of surprising. I know we're not going to get non-farm payroll today, more than likely, but we do have, we are going to get our ADP data tomorrow, because it's private. We are also going to get, what else are we getting this way? We're not going to get everything. Oh yeah, ISM, and which is also private data. So what do you think, Ryan, as far as our labor data, as far as it's what we're going to get this week, and how do you feel about the U.S. labor market right here?
I don't think there's any change. I mean, yeah, the manufacturing, it was less negative. Okay, it wasn't positive; it was less negative. And manufacturing's been, in the doldrums for a couple of years now. I think unless we see a really marked change, we're still in the same vein of data where we might get a 50k, a 60k, or we might get a low number. Triple digit jobs numbers, I think, are our history for the foreseeable future unless something changes. So I'm not expecting anything to fall off a cliff. There may be a bit of seasonals in the ADP data after coming off the holiday period, something like that. But unless there's a big variation and we don't get anything that's massively negative, I think the market just carries on as normal.
Okay. And K-Man, do you have any thoughts on the labor data before I make a run around and see what you guys are looking at for the day?
As we were already saying yesterday as well, I mean, we're still waiting for the first month really for them to show a sharp drop off. We've had some slowdowns, but to show a sharp drop off, we haven't really seen it yet. But things are bubbling under the surface, and they could show up any time, because we heard from Apple, from quite a few companies, that they plan to lay off people again.
Yeah, I mean, some big layoffs are planned, so it's going to be interesting to see how that makes its way into the NFP numbers. All right, well, Ryan, what are you looking at for the day? What are you what's on your radar? What's the one trade you would be like really focused on?
Well, as I mentioned earlier, I'm looking at the S&P, see if we're going to bust this 7K level and bust it properly. But also, I'm keeping a bit of a beady on Euro Sterling, which is sitting on its next support level after breaking the 86.45 70 zone.
Yeah, Michael Weissman in our chat room, he pointed out that we got a nice little head and shoulder pattern, and we closed below the 200 DMA yesterday, and we closed below this rising trend line, which, you know, most of the Forex Analytics subscribers are already very well aware of this development, but it does look pretty weak. I mean, the euro hasn't been able to find very many friends.
No, it's, as you say, the euro as a whole is looking a bit on the back foot at the moment. All the reasons for it going up have sort of dissipated, so it's looking in a bit of trouble at the moment.
All right, K-Man, what are you looking at today? What's the one idea that you're thinking about right now?
Just dollar remains relatively well supported. Actually, its yields are a little bit higher, stocks are a little bit higher, dollar is a little bit higher. We've seen this before, right? And perhaps still a bit of the initial wash effect. The one that I'm going to have a close eye on, because we are talking about this potential RBNZ also starting to change tack. Later today, we will have the New Zealand employment report up, and that should be an interesting read coming on the back of that RBA today. So I think that's going to be an interesting one, but that's going to be for later in the day. I think it should be a relatively how should I say, not with sharp bounces also, unless we get headlines, should be a relatively smooth US session.
Yeah, and just so everybody knows, 4:45 Eastern, that's when the New Zealand employment data comes out. It actually comes out while I'm typing up the daily analysis for Forex Analytics. So I know it comes out around then, because it's always I kind of have to stall what I'm doing to get to it. So thank you very much, K-Man. And I will tell you guys, first of all, if you go to if you go to Forex Analytics, there we go. If you go to Forex Analytics, you look at the patterns in play. I want you guys to focus on this yesterday, right? 18 hours ago, 1770 to 11780 level in the euro. The reason why this is so important, and I'm going to show you guys, there's a few different things here, and it doesn't mean that the euro is ready to go to 120 either. We got to get above this channel resistance, which comes in around 118.50 roughly. But take a look at this. So if you look at this channel, right? Here's the low, here's the high. We are at a 50% retracement right here, right? And then also, if you take this low to that high, it's also a 618 retracement. Also, it's the previous triangle. You can see the triangle here, breakout point. So there's massive confluence of support down here. So if you've been, on the short side of the euro, you really need to be a little careful, because that's really big support around the 117.50 level. If that breaks, it's going to get ugly for the euro. But the flip side is, there's so much support here. If we can get above 118.50, we might see a move back up towards 119. So I would keep an eye on the euro today in this this descending channel while we're in it. And see if we can break loose of it sometime today, and that's gonna be your actionable ideas from the three of us today. And tomorrow should be a more exciting day, in my opinion, because we will get ADP non-farm. We will also get ISM services data. So I want to say thank you, everybody, for being here today. And tomorrow should be a really, really exciting day in the markets. And I still think today's got a good chance of being pretty exciting. It's just, it just won't be at this very moment in time. So Ryan, K-Man, thank you, gentlemen, for being here today. Any last minute comments before we wrap it up?
Nope, not for me.
Nope.
All right. Well, guys and gals, have a great day. If you are in the Forex Analytics community, remember in 40 minutes, the Morning Edge will be starting, and I'll see you guys there. And if you guys have not signed up for our newsletter, make sure you do so. Just go to our website right in the middle. We are just had a meeting on trading analytics with our developers just a few minutes ago, as a matter of fact. So make sure you're signed up. So you are going to be the first to know and get all the benefits of being one of the in the launch priority release list. So make sure that you guys are signed up for that newsletter, so you'll be the first to know about what's happening with trading analytics when we launch it, and have all the perks that the rest of the public will not. So with that being said, I hope you all have a great session today. We will catch you tomorrow on the F.A.C.E show. Thank you so much for tuning in. We really appreciate your time, and we'll see you all tomorrow. Thanks, everybody.